Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stop pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's from pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounce. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up watching them can big profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching them can make profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up watching them can big profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits.
That TTG money gang,
hey, making profits.
We some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading of Livestream. What did Jerome Powell just do to this stock market? What a crazy, crazy, crazy day you had today for Fed Day. My goodness, I've actually never seen such discrepancy between a public release statement and a speech by Jerome Powell. Complete, total opposite verbiage in those two things today. Complete opposite reactions from the market from those two things today. Jerome Powell had a chance today to continue the bear market rally that you've had in the month of October. The month of October was the best month since 1976 for the Dow Jones, over 14% gain. That's very impressive bear market rally. It's actually the best month of October since like 1901 for the Dow Jones. Jerome Powell had a chance today. He had a chance today to extend that rally. The Federal Reserve came out. They gave you a statement at 2 o'clock, a rate decision. They gave you 75 basis point hikes. That was already expected. Everybody knew that they were going to give you 75 basis points. We talked about that yesterday. And the statement that they put out at 2 o'clock said specific things. The markets reacted in a specific way. Jerome Powell came on and gave a public speech at 2:30. Jerome Powell's speech at 2:30 was a far different tone than what was in the release that was published at 2 o'clock. At 2 o'clock, you had the stock markets absolutely rally about 7 or 8 points off of the announcement or the release of the statement. Then when Jerome Powell spoke, the markets then turned around and dropped, dropped about 15 points. So you dropped about double of the amount that when you rallied to the upside on the back of the statement that was initially put out and was released at 2 o'clock. So major discrepancies. What happened? What did Jerome Powell say that changed the way everybody interpreted the announcement that came out at 2 o'clock? We're going to go through exactly what Jerome Powell said today and exactly why that made the markets move to the downside. I didn't expect Jerome Powell to be this hawkish today. He was much hawkish than the statement itself. How that is, we're going to talk about it. Why that is, we're also going to talk about that. And now, what does this mean for the markets now going forward? Because now you have a CPI number that comes out next week on November 10th that now is going to create a ton of anxiety for investors between now and then, as you have a lot of stocks that are making new lows now at the back of the markets breaking to the downside today. We broke below a couple of key support levels. We're talking about where those next support levels lie, how much further to the downside can Jerome Powell's speech from today, how much further down can we push, can that push this market? We're going to talk about it. I'll cover with you guys some of an open position that I still do have also, and kind of give you what my game plan is for the rest of that. So we have a lot to talk about, a lot to cover. There's a lot we have to discuss here today. A lot happened today on a big picture, and we're going to discuss it all for you guys here today. We're going to answer all those questions, so you guys are no longer trying to figure out, or you're not left in the dark. All right. So welcome to the True Trading Group live streams. Make sure you guys get yourselves a pen and a paper. You're going to want to take notes for this one. We're going to talk about a lot of different things that can help you guys become better traders, and more importantly, help you guys make money over the next couple of weeks, next couple of months in this crazy market, volatile environment we find ourselves in. My name is Michael Edward, former award-winning hedge fund trader, now the current head trader at True Trading Group. And if you don't know by now, TTG is the fastest growing and highest rated premium online educational platform that's available today. And if you're ready to learn, trade, and profit for real, then you've come to the right place. So make sure you smash that like button, subscribe to the channel, turn on your notifications, share this stream on your own social media. Let's reach out, let's educate, let's empower as many retail traders as we possibly can. I do these live 6 nights a week, Sunday through Friday, where I go live on this YouTube channel totally for free with myself, other professional trading mods, and special guests. We'll drop golden nuggets and provide you with free lessons and education that can help you become better traders immediately. But why should you listen to anything that I talk about in these live streams? Is it because I'm right 100% of the time? No. It's because I've been doing this for about 17 years, guys, and I began my career working at a hedge fund in New York City in 2007. It was my first job out of college, and then 2008 happened, and that was the Great Recession, the stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. And now today, along with my team of 9 other professional trading mods and a 20-person staff, over 20-person staff, we have now helped thousands of people from all over the world, from all walks of life, reach their goals and become consistently profitable. TTG, because of that, like I said, is the fastest growing and highest rated educational platform today that combines university level trading and investing courses with premium stock market tools, with workshops and mentorship on stocks, options, crypto, futures. We also focus on all different styles of trading, day trading, swing trading, and yes, also long-term investing as well. We take that university level of curriculum and education and we pair it with today's top financial tools that professional traders use that help them make better decisions, that help them become more successful, but are expensive. If you were to go to these companies directly to get access to these tools and resources, it's going to cost you probably $5,000-$6,000 a year. That's a lot of money. So we spend years building relationships with those companies so we can offer their products on our platform at no additional cost to you. We also give you access to 10,000 of the TTG family members from all over the world. Some of the most helpful, successful, and supportive community of traders and investors that are going to be out there. And of course, all of our real-time trade alerts from myself and the pro traders at TTG, the nine others that we have been able to maintain collectively amongst the group, about a cumulative win rate of around 80% now going on the last 2 years. We're a family at True Trading. We leave no trader behind. So like I said, if you are new, make sure you subscribe to the channel, smash that like button, turn on your notifications, and let's make sure that we educate as many retail traders as we possibly can by sharing this stream on your own social media. Now, guys, listen, I need you to give me your full attention during this live stream because we have so much to talk about. We have so much to cover. So much happened today with regards to the Fed meeting and Jerome Powell's speech and what this means for the markets going forward. The volatility continues to be at an all-time high in this market, and the volatility today was just cranked. I told you it was going to get cranked back up to 100, and it was cranked back up to, if the scale was from 0 to 100 today, the volatility was cranked up to about 600. That's how crazy and volatile today was. You went from a 7 or 8 point rally to a 15 point drop or a 14 point drop. All right. So that is peak volatility in this overall market. And it all started at 2 o'clock when the Federal Reserve published their official statement and told everyone that they were raising the Fed funds rate by 75 basis points. That's where it all started. Then you got your speech at 2:30. Before I get into the details of what was in the statement and what was in the speech, you need to understand that the environment that you find yourselves in right now is a bear market. And when you get these rallies in the market, they are called bear market rallies. Bear market rallies can be some of the most intense moves to the upside that you will ever see. So some people, contrary to what many people think, the biggest moves to the upside in the stock market throughout history have actually occurred during bear markets, not during bull markets. During bull markets, markets just basically just slowly go up. In bear markets, markets go down a lot very quickly, and then they bounce a lot very quickly, and then they go back down a lot very quickly, and so on, and end up making new lows, which what the markets have been doing so far all throughout the year of 2022. You've had huge moves to the downside, big rallies back up, and then bigger moves to the downside to make a new low, and that process has repeated itself like 4 or 5 times so far in 2022, providing active traders with tremendous opportunities to capitalize whether the market's going up or down. I did a live stream yesterday, and I told you guys the plan for today was going to be based upon if Jerome Powell was going to change his tone from continuing to be as hawkish as they've been for the last 2 months, or if Jerome Powell was going to be less hawkish. Now, I thought that Jerome Powell was going to come into today and his tone would be a little bit less hawkish. This statement was less hawkish. The actual statement that is released at 2:00. Even when you're listening to CNBC today, you had 4 or 5 different contributors on CNBC reading the statement. And every single one of those people on CNBC were like, wow, this is actually much more dovish than people were expecting from the Fed. And this is actually good for equities. That's why the markets rallied 7-8 points when that statement came out. Stop trying to necessarily predict what these catalysts are going to be. React to them, especially in this environment. Like you're going to have another major catalyst coming up next week, which is going to be your CPI data. Don't try to predict what that CPI data number is going to be. Just react to it. Have a game plan either way. This is not the time to try to be a hero and try to say, I knew CPI was going to be this, or I knew Jerome Powell was going to say that. You can have your thoughts and obviously have your opinions, but don't allow that to make you become a biased trader. Stay neutral. Stay neutral. Okay? Because I came into today on this Fed meeting today, and I was like, I think Jerome Powell is going to be less hawkish. So the statement came out. You got the issue in the statement was where the Fed actually had said that we believe, or we are going to acknowledge that the effect on the economy from our rate hikes thus far has a lag. That is the first time that the Fed has said that in one of their official statements. So far, up to this point, the Fed has said, we're going to do whatever we have to do to bring down inflation. We're going to keep raising rates. We're nowhere near finished. That's what they have said in their statements prior. This is the first time that the Fed acknowledged in a statement that we are going to assess the impact of the cumulative effects of our monetary policy. That was one statement. Follow on to that statement, they said, while recognizing that there is a lag of economic effect from the rate hikes that we employ. That statement is the first time you've gotten something like that, and that actually moved the markets to the upside. That made people feel like, okay, wow, the Fed is acknowledging that as they're raising rates at the fastest pace in history, there's going to be a lag period before it actually shows itself in the data. So that would mean that the Fed is telling you we're getting ready to slow down. That's why the markets moved to the upside. When Jerome Powell then came out, and I got myself into a tier 1 position on call options at that time. Tier 1 position, for those that don't know, I trade in tiers. So a tier 1 position is like a starter. It's a feeler. It's about 25% of your desired risk. So if you're someone that normally, if you were to enter a trade and you would normally risk $1,000, you would only risk $250. If you're someone that gets into a trade and normally risks $100, you'd only risk $25. That's what a tier 1 position means. Okay. It's all part of the tier trading strategy. It's something I learned working at the fund. I implemented my retail trading. Once you learn how to trade in tiers, I guarantee you'll never want to trade any other way. Tier trading will completely change your trading for the better. TTG members can all attest to that. Once you learn to trade in tiers, I guarantee you'll never trade any other way. So, and before Jerome Powell started speaking, the market started rallying and was rallying because of the markets were rallying because of that actual statement. You know what? There's only 331 likes on this video, so I'm going to take a pause. And before I get into any more details about what happened, I need you guys to go ahead and smash that like button. If you want to understand what happened in the market today, I'm going to tell you exactly what happened in the market today and exactly why the markets did what they did. But you guys got to smash that like button if you guys really want to understand what happened today and what I did and why I did what I did. My actions today were very specific. So you guys got to go ahead and smash that like button. And it had a lot to do with hedging also, which is something that we just talked about in Trader Palooza with members not too long, with members just last Saturday. So go ahead, guys, and smash that like button before I give you another word. Before I give you guys another word. You got about 1,000 people that are watching us live. You guys got to go ahead and smash that like button. Nice. Way to go, Mason. Mason up $1,300 today. Okay, guys, we're at 522 likes. There are almost 1,100 people that are on this live stream. I want you guys to smash that like button if you want me to continue my analysis on what happened today. Continue to smash that like button. I know. There he is. This son of a... You ruined it, Jerome. You ruined it. You ruined the bear market rally today. All right, guys, smash that like button. Let me get into this now a little bit so you guys can understand kind of what happened. So I'm showing you my charts right now, and this is what the SPY looked like before the statement was released at 2 o'clock. So at 2 p.m. Eastern, a public statement is given from the Federal Reserve where they announced we're raising rates by 75 basis points. You got that at 2 o'clock. With that comes an actual public statement. Inside the statement, that's where it said that they are going to be mindful of the lag that their rate hikes have on the economy. And that is what gave people excitement. Say, okay, well, that's the first time they've said that. That's dovish. And that's going to make people believe that the Fed is going to actually start to slow down the pace of their rate hikes. So when that happened, that happened. So you see the market's initial reaction on the back of that release, because that is dovish. That's not something that they've said before. So once the markets gave you this deep pullback, I bought right there into tier 1 call options. So this is what I did. I said, okay, that statement is dovish. The statement that was just released is dovish. That's not something that's really up for debate. It is a more dovish statement from the last Fed meeting. Okay. So the markets moved to the upside. So I came on the mic and chat. I go, guys, okay, listen, that statement is more dovish than people were expecting. I'm going to get myself the tier 1 position on some call options. And then it's going to be up to Jerome Powell to either support these sentences that are in the statement or squash them and kind of swipe them under the rug and not focus on them. Does Jerome Powell really hone in on these topics, or does he kind of brush them over? If he hones in on them, then the markets will be able to break 390, which is the major resistance level that we've been talking about. I had you guys literally yesterday. We had you draw a line across that resistance level. If you guys recall the 390 level on the SPY, if you've been following our live streams here on True Trading Group for a while, then you'll remember that over the last couple of days, we've drawn this line that you guys see on my screen here, that this was that major level of resistance at 390. So that is exactly where, the markets kind of stopped and we kind of froze there early this morning, or this afternoon rather, after we got into our calls. So there's your entry on the calls, right? And then while the market starts to rip to the upside. Now we start to rip to the upside and say, okay, wow. I go, guys, Jerome Powell has not even started his speech yet. And the market is already back up there towards highs. And the options that I was in went from like $5.80 all the way to $7. And he hasn't even started his speech yet. So I said, okay, I'm going to take some profit here. Why not? The market's just ripped $4. I'm going to take some profit here. and then now Jerome Powell starts speaking. So that's exactly what I did. I took some profit right there on the tier 1 position on call options. Now, once you take profit on a tier 1 position, you're left with a very small position because remember, tier 1 is only 25% of your desired size in the first place. Then Jerome Powell started speaking. And once Jerome Powell started speaking, you can see the market started to hesitate, right? The market started to hesitate while Jerome Powell's speaking, and they're waiting to see, well, what is he actually going to say, right? What's Jerome Powell going to say? Then he comes out, and when he starts his speech, that happens. And the reason why that happened was because Jerome Powell said basically the exact opposite of what was in the actual statement that was released at 2:00. He said very specifically, do not confuse the word lag with meaning we are pausing. Then he went on to say, we are very, 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 or it is very, 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 he actually said very multiple times, premature to think about pausing. Well, nobody really thought you were going to pause. That's the first place. We just want to see you slow down the pace of your rate hikes. Tell us that you're not giving us 75 basis points next month. Tell us that. And during his speech, okay, or after his speech, he was asked a question by a reporter. That question was very specific. The reporter said, Chairman Powell, this is very confusing for people because your statement and your speech say different things. And he asked him flat out, does this mean 75 basis points are off the table for December or not? It was a very direct question. And Jerome Powell did not answer it. He said, what is less important is how fast we get to where we're going. What is more important is where is our destination? That's what he said. Meaning it matters how far we go, not how fast we get there, is the way is how he answered the question. This is not what the market wanted to hear. That is not what the statement says about, oh, well, we recognize that there's a lag in the rate hike, so we have to be mindful of that, and we're going to look at the cumulative effect of all of our monetary policy, which includes reducing the balance sheet, raising interest rates, et cetera, right? So after he says that in his speech, that happens. So he refuses to answer the question. That happens, right? That happens. Then he's asked another question, and I believe it was right before, it was the last question that he was asked before his speech before he finished the Q&A. So he gives a speech, then he takes a Q&A. So when he's done with his speech and he now takes his Q&A, the last reporter asked him about thinking, has the likelihood of a soft landing, that possibility, has it narrowed? And his response to that question was yes, very definitively. Yes. It wasn't like, oh, well, no, it was like, yes, but it's still possible. That was his answer. He followed that up with adding to the risk of us not tightening enough is far greater than us tightening too far. Now, that is what sent the markets to the downside, right? That statement is what just caused the markets to sell off into the close. And why is that? That's because that exact statement was used 3 to 4 times at the last Fed meeting you had in September. So the last Fed meeting, you had that statement, those words were used multiple times. And those are very hawkish words. Okay. Those are very, very hawkish words. That's Jerome Powell saying we would much rather tighten too far, have a recession, and then we have tools to then bring us out of the recession. That's what he said. He goes, we have tools to support the economy if we were to tighten too far. What that means is if we have a recession, we have tools to get us out of it. That's what that means. So for him to say that phrase again during this speech is what the markets really did not like. And the things that he said and the tone that he used was the exact opposite of what was in the actual statement released at 2:00. And that's why you had such opposite price action. Okay. Such opposite price action, which is where the markets initially rallied, right? The markets initially rallied off the back of that statement that was released. And then he starts talking, and then the markets gave everything back up because it did not line up with what he said. This is what I've been talking about. You all have a heads up, right? This is what I've been talking about, meaning preparing for a recession. I've been saying for the last several months, I believe that we will have a recession. I just believe it's going to be a mild, moderate recession. I don't believe it's going to be a severe one like a 2008, 2009. I don't believe that that's what's going to happen. But I do believe that in the next 3 to 9 months that you're going to have a recession, not just around the world, but also here in the United States. You'll have other countries will have worse than the United States. The United States will have probably the least because the economy in the U.S. at this point, throughout the monetary policy tightening, throughout this point of inflation and everything else, and labor markets, the U.S. is still by far in the greatest position from an economic standpoint than other countries around the world. So I do believe that we're going to have that mild recession, but you have a heads up for it. If you have, as long as you've not been in a coma for the last 12 months, then you know that every single person that is involved in the markets is talking about the possibility of a recession. Now, when 2020 happened, you did not have the ability to prepare for losing your job or getting furloughed or being laid off or having to close down your business from one day to the next. You didn't have that possibility. But if you're worried about what's going to be happening next year, if you're worried about, unemployment's going to go up, well, I'll tell you now, unemployment will go up, but it has to in order for inflation to come down. Unemployment right now is between 3.5 and 3.7. That's the lowest unemployment that you've had in 50 years. Okay. As the Fed goes through this monetary policy tightening and the economy slows, that unemployment rate's going to rise, but fun fact, over the last 2 decades, the average unemployment rate over the last 2 decades is over 5%. Many of you may not know that, but the average unemployment rate over the last 2 decades, if you factor in every single year, taking into account your economic expansions and the recessions that you had in the early 2000s and the recession you had in 2008, 2009, and the scare of a recession in 2015, 16, which we ended up not having. If you factor in all of your unemployment rates, you're over 5% average. Right now, you're 3.5 to 3.7. Unemployment will go higher. I think it probably goes into the mid 4s, high 4s, maybe the low 5s, and that's just going to fall right in line with the average over the last 2 decades. So yes, unemployment is going to go up. The labor market's going to soften. So don't be surprised when those things happen over the next couple of months. Okay, that's the average unemployment rate over the last 20 years. So I think you're just going to go back up to that average. I don't think you're going to see like 9% unemployment like you saw in 2009, almost 10% unemployment in 2009. I don't think you're going to get anything like that. The labor market right now is too tight. The labor market right now still is adding jobs. You got the ADP employment report today. The ADP employment report today, the private sector added 239,000 new jobs, mostly leisure and hospitality. But the expectation was for 193,000. So again, adding more jobs than the market's expected. And then you just got your JOLTS number the other day. The JOLTS number, that's job openings, 10.7 million job openings. The expectation, the month prior was 10.3. So there's more job openings than there were the month before. That's insane. The economy is slowing down. The Fed is raising rates. The real estate market is in its own recession. But the labor market is still as tight as it can be. Now, it's a lagging indicator, but right now the reality is that you've got your job, you've got your cashed up, and you have an opportunity to be prepared for what is going to happen. People are cashed up. They've got the job during the most volatile time in the market that I've ever seen. I've never in my entire trading career seen a situation where you had a market where, I'm not sure where we are now. We were down 2.5% on the SPY today. What is that? That puts us at, I don't know, 21%, I think, about down 21% for the year. We were down 27% at the lows of the year with 3.5% unemployment. I've never seen that before in my entire life. I never have. You got Alphabet and Amazon are underneath $90 a share. It's nuts. Okay. It's nuts. And for those of you that think that for those of you that don't think that you can learn this and transition into a full-time trader, I want you to watch this real quick. If you're a member of True Trading Group and you have transitioned into a full-time trader, type the number 1 in chat for me, please. Again, if you're a member of TTG and you've transitioned into a full-time trader, just type the number 1 inside of chat. This is for members that are full-time traders. Just type the number 1 in chat. I want to get a feel for how many people that we have and how many members that we have in True Trading Group that are full-time traders now, thanks to the TTG platform. So just go ahead and type the number 1 inside of chat if you guys are full-time traders. Now, for anyone that thinks you can't learn this, just see how many people are typing the number 1 in chat. Now, is trading easy? No. But is anything worth doing ever easy? No. But is it also impossible? No. As you can see by all these members in True Trading, I'm telling you that they've transitioned into full-time traders. And you don't have to become a full-time trader if you don't want to. Okay. I also can't just guarantee that you're going to be successful just because you join True Trading Group. You got to be willing to put forth a little bit of effort to actually decide that you're going to take matters into your own hands, and that to actually decide that you are going to learn a skill set. And that is what this is. It is a skill set. It is not gambling. It is not predicting the future. There's too many people out there and they drive me crazy. And they're such amateurs to think there and say that it's all about, oh no, you got to predict the future. There is not one single stock market professional that actually does this for a living, that makes millions of dollars a year, that manages hundreds of millions, if not billions of dollars of other people's money for a living. Not one of those people are going to tell you that being good at this is predicting the future. It's all about analyzing what is in front of you and identifying high probability setups and opportunities. That is how you guys are going to be able to make consistent profits in this market. And that's exactly what we will teach you guys how to do as a member of True Trading Group. Because the fact of the matter is, even in all this craziness, even during all this volatility, while the stock market's crashing, where Alphabet and Amazon and Microsoft and Meta are making brand new lows on the year, while stocks like AMD and Nvidia are down 60 and 70%, while Qualcomm's getting its head cut off right now, while that's going to the downside on the back of earnings, when you're seeing all these things that are happening right now in the markets, members in True Trading Group, the fact of the matter is they're making money right now, guys, and they're becoming better traders. And I'll prove it to you. Guys, type the $sign now. If you're a member of TTG, if you're making money and you're becoming a better trader in this environment, I want you to type the $sign in chat for me right now. Just type the $sign if you are making money and you're becoming better traders this year because of the TTG platform. In the most volatile environment that I've ever seen as a trader. You've had more instances, and today is one of them. You've had more instances this year where the S&P moved either up or down more than 2%, more times than any other year in history. That is the absolute definition of volatility. Now look at all these people that are typing the $sign. I love these people to death. They're the members of TTG. They're the people that I consider my family. But if they can do it, so can you. There's no difference between them and you. They found True Trading Group the same way that you did. That's one of these live streams. They had all the same excuses that you have. They got small accounts. They've got a full-time job. They've got no experience. They lost money in the markets before. They were scammed by some other group. But yet now they're telling you they're actually making money. Is it because they're smarter than you? No. If they can do it, so can you. Cody Payne says, I want to be. I'm just unsure I've got enough capital to do so full-time for a large enough portfolio to survive off of in the start. Cody Payne, my advice to you first, and I'll actually ask members a question to follow this up, but I would advise you first, don't try to just say, I'm just going to start trading and I'm just going to become a full-time trader in the same day. Take your time and actually go through the learning process. Learn first, trade second, profit third. But a very big misconception that a lot of people do have is that a lot of people think you need tens of thousands of dollars to get started trading. It's not true. I have thousands of members in True Trading Group that have started with less than $1,000 and are making money now with starting with just a couple $100. Guys, do me a favor. If you're a member of True Trading Group, real quick, if you're a member of True Trading Group, if you started when you joined TTG, if you had less than $1,000 in your trading account, but now you're making money, just comment in chat real quick. Just tell me what you started with. Do me a favor, just tell me what you started with. Okay, just tell me what you started with. If you guys are making money now and you started with less than $1,000, tell me what you started with. Okay, Supreme started with a $500 account. All right, let's read a couple of these other comments here. $300 for Maria. ES started with just $600, $200, $500. Diane started with a free share that she got when she joined Robinhood. That was $100. $4,000, $500, $700, $500, $500. Yeah, Camden's like, I thought I needed around 5K. No, you don't. Look, these are members of True Trading Group that are telling you what they started with, Camden. And Cody, I saw you out. You're the one that actually asked the question. These are members that are telling you this is what they started with when they joined. You know, you don't need $5, $10, $25,000 to get started. You really don't, but it's a big misconception. Autumn Rasigno, I got ripped off. Now I'm so skeptical. I'm not sure what's true or not. Honestly, facts. I feel you. I know exactly how you feel. This industry is absolute garbage. There are so many people that are full of complete crap that have no idea what they're talking about. They just sell you a dream. They'll tell you that, oh, I'll show you how to make $1,000 a day, every day for the rest of your life in just 10 minutes. I've got a special secret equation that Wall Street doesn't want you to know about. I've got one simple pattern. I've got one simple indicator that's going to work 110% of the time. It's going to make you a millionaire in 30 days. Quit your job in 30 days. I guarantee it. Join me for 20 minutes a day. Bullshit. I understand that you're skeptical. Honestly, to be completely honest with you, most people that joined True Trading Group, most people were skeptical at first, and now they only wish that they joined sooner. Do me a favor, members, type the number 2 if you were skeptical at first, and now your only regret is you didn't join True Trading Group sooner. Type the number 2 in chat if you're a member now and you were skeptical before you joined, and now your only regret is that you didn't join sooner. Just type the number 2. Autumn, I completely feel where you're coming from. Look at how many people are going to type the number 2 when I just asked that question. Every single one of these people felt the exact same way that you feel right now. Skeptical, vulnerable, suspect, right? Like anxious. And now they all wish that they joined TTG sooner. That's because True Trading Group is, you said you don't know what's true and what's not. We are true. We are the most transparent, honest, moral group out there that genuinely gives a damn whether you succeed or fail. And we hold ourselves accountable to you. True Trading Group is a business. We are not a charity. You want us to be a business. You want us to be able to be held accountable for you. Mike is a good salesman, but he is a better trading and teacher. Thanks. Thanks, Mo. Thanks. Do you have laptops tonight? Yes, we do, actually. Yes, we do, actually. We do have a couple of laptops. We have 5 laptops for today. We do have 5 laptops available for today, Tammy. Tammy's waiting for the laptop. Tammy wants the free laptop. We got a lot to get into today, guys. We have a lot to cover here today, but I'm telling you guys this now. You know, this is the time where learning what's happening can help you make the right decisions that can build wealth for you and your family for years to come. You don't need to learn when the market's at all-time highs. Learn when the markets are down so that you are able to take advantage of wealth building opportunities, because every time the stock markets go down, and we're down, and I think we do go lower as well. We're not, you know, the low 375 today. That's not the lowest that we're going to go. Okay. So you want to be able to learn what you're doing, understand what you're doing, make money on the way down, learn how to short, learn how to buy put options. Don't just be a victim and be a prisoner of your long-term portfolio or watch your 401k balances move to the downside. Learn how to make money to the downside, learn how to short, learn how to buy put options, right? Learn how to do all these other things. Learn about inverse ETFs. These are things that you can buy that will actually go up when the overall market or individual stocks go down. Learn how to do these things and then take that profit and then roll it into your long-term portfolio when the markets are down 25, 30, 35%. That is how you set yourself up to build wealth for the long haul. But you need to learn how to do that now, not a year from now when the markets recover, when the markets are significantly higher than where they are today. We're going to be much higher than where we are. Let me see who's new on our live stream real quick here. I want to join your group. I want to join your group. Any Black Friday deals, says Foodies Land. Listen, we have an offer that we're offering people here right now. Our Black Friday, we're not going to have a cheaper price for Black Friday, but what we do now is we offer a price match guarantee. So even if we do, let's say we do move our price lower, we have a price match guarantee. So you guys can join with confidence knowing that even if we do drop the price lower, we'll give you guys and refund you back the difference. So we have a price match guarantee at True Trading Group. But listen to me, Carol. Let me see who's new here. I see a lot of people are asking about the membership. Let me just see who's new. We have a lot to cover today, guys. Do me a favor, type the letters TTG if you're not a member of True Trading Group. I want to see who's on right now that's not part of TTG, because I talked a lot about what happened today. I talked a lot about it in chat, but I want to get into a lot more detail today about what happened with Jerome Powell, what happened with the speech, and what this means for the market going forward. What does this mean for the potential of a Santa Claus rally? Like, what does all these things mean? We're going to talk about that, but I want to see who here is new first. So just type the letters TTG. Let's see. Tammy Silver, she wants that laptop. Jonathan Wilson, Vincent, Killed by Papa, RS, Gaber, Chaitali, Camden, David, Arjet, Julius, 30 Cuban, Dod Barrow, Jayathi, Big Country, Jack C, Julius Padilla, RJM, Massimo, what's up? Cody Payne, I need you. Cody Payne, I am here for you, my man. I am here for you. We are ready when you are. Cody Payne says, I need you. CB, Samuel, Twisted Merm, Pumpex, Stop the Lies, Ben, Juso, Kenneth, Oscar, Tariq, Deepak from India, what's up? We have a lot of members over there in India. Amakula, S-Do, Rude Boy. We have a lot of new faces here today. What's up, everybody? That is brand spanking new to the live stream. Let me tell you real quick, there's a lot of people that are asking about how they can join the platform. I see one person just said, if you guys can give me a deal for 2 to 4 months, I'm in. I'm not going to give you a deal for 2 to 4 months, but I will give you a deal that's actually even better than that, because a TTG membership, it's 12 months. It's an entire year. Okay, 30 days, 60 days, that is not enough time for you to go through the courses, go through some of the workshops, attend some of our study groups, do some mentor sessions, and really get a real feel for what it is you're doing. Trade on the simulator. Learn to use the tools to give yourself a real chance at being profitable. Too many people try that, just join True Trading Group and they just say, I gotta make money right now. Take your time, learn first, trade second, profit third. Our membership is an entire year. Okay. Now it's normally $2,212, but I'm going to keep this for one more night for you guys. For one more night, I'll give you the 48% discount. It brings the price down to $1,147 for the entire year. One price. Gives you access to the bulk and the core of everything that we have. There's no upsells for courses or tools. I got to welcome Ronnie. Wow. Tammy, you better hurry up, because Ronnie was like, you guys have laptops? I'm taking one. Tammy, I know you want one. Hurry up and go grab one. There's only 4 of them for this evening. You guys can go to ttgoffer.com and then type in the coupon code TTG121. Click apply code. The price will drop to $1,147. As long as you see a laptop on your checkout cart, that's how you know you're getting one. Okay. If you see one, you're getting one. It's plain and simple. Once we sell out, they will no longer be visible in the checkout cart. Okay. You don't have to enter your address to get the free laptop. We will send you a welcome email after you join. And in that welcome email, there's going to be instructions how to claim that free laptop. We ship anywhere in the world. We have 10,000 members in True Trading Group. They literally are all over the world. We have members on every continent. Not in Antarctica, maybe one day, but nobody in Antarctica. We have members literally in all other areas of the world. We will get you that laptop. We cover the shipping. It's totally free. Use it to trade with, use it for work, give it to your kid for school, sell it on eBay. I don't care. Give it to somebody for a holiday gift, whatever it is that you want to do with it. It's our gift for you for joining the TTG family. There are now 4 of them available for this evening. If you have any questions about the membership, you can text 786-505-4049. But let me tell you what you actually get included with your membership because it's an all-inclusive membership. And I told you, you said you wanted 2 to 4 months. I'll give you a deal even better. If you can't make back our membership fee of $1,147, if you can't make that back at least one time during your membership, after going through our courses, passing our quizzes, and attending a study group, I'm going to give you double your money back. I'm dead serious. That's the deal. I will give you back $2,294. So I'm like, you said you wanted a better deal. I'm not going to give you a membership for 2 to 4 months. Not enough time. Our membership is for 1 year. This way, there is no rush. Go through the courses. Use the tools. There is no rush. Go at your own pace. Go at your own on your own schedule, on your own time. And if you can't make back that 1147 at least once, I'll give you $2,294. I don't think you need it. We've only had to give a refund to 2.6% of all of our users since 2016, but it's there for peace of mind. Like Autumn said before, they've been scammed before. They don't know what's true and what's not. Well, that's how I back up my claims. I put my money where my mouth is, and to give you peace of mind, we will back it up with a double your money back guarantee. It is just that simple. Go to ttgoffer.com, enter the code TTG121 to get that laptop. Let me tell you what's included, because you get access to all of our tools and all of our courses. And then, guys, bear with me here. Don't go anywhere. I have a lot to cover today about the market. You had a big crash today in the stock market. Jerome Powell just completely crashed the market today. What did he say that made the markets crash? What does this mean now going forward? How much lower do we go? What's the next catalyst that can maybe make the markets bounce? Does the possibility of a Santa Claus rally, is that taken off the table now? Did Jerome Powell just knock out Santa Claus? Did he just release the Grinch? Is that what just happened? Is everybody getting cold for the holidays? I'm going to answer all those questions for you, but let me tell you what's included in the membership first. We have a lot of people that are asking about how to join. You're going to get our entire 18-course curriculum. It's all of our courses. It's a simplified version, but I learned working at the fund in New York. Then all of our 9 other professional trading mods, they've also added to it. Okay, and that's the 18-course curriculum. You get every single course. Each course has multiple chapters. Each chapter has multiple lessons. Joe, maybe if you want to post the syllabus in chat, members can, or viewers rather, can click the link. You can see all of the topics of the courses. So you guys will know exactly what topics you're going to learn about when you do join our platform. But you also get access to some of the greatest trading tools out there. Benzinga Pro's real-time news feed. Quote Media's full book level 2, TradingView's premium charting software, ETNA's simulator to let you trade with fake money so you guys can practice, the Trade Ideas scanner, the industry standard to make sure you're always focused on the hottest stocks during the day. Our own proprietary scanner lets you create custom scans, dark pool data, unusual options activity, options flow, analyst ratings, insider buying and insider selling data, short data. All of these things are included for that 1147. Our chat room, our mobile app. You can't be in front of your computer all day long. Don't worry about it. Our mobile app's got you covered. As long as you have a cell phone, you can be connected to chat, see the screen share, because the mods and I share our screen with you. You see what we're looking at. And we also are live on the microphone talking to you from 7:30 a.m. Eastern all the way through until the market closes. The mods and I are with you for the whole day. We're not gone after an hour or two and you're left to fend for yourself. So you'll be able to listen to all of that on the mobile app. And the best part is you get real-time push notifications whenever one of our moderators enters or exits a trade. That way you can always make sure you're following along with what's going on inside of our chat. Okay. You also get 2 private study group sessions with one of our pro traders. So you guys can ask questions and really speed up that learning curve, get you guys started on the right foot. You just have to go to ttgoffer.com, enter the code TTG121. And if you have any questions about this membership at all, you can send a text message to 786-505-4049. Don't call that number. It's a text message only phone number. 786-505-4049. Phone number is right there at the bottom of your screen. We also do accept PayPal credit. If you guys want, you can select PayPal credit on the way through to your checkout. All right. And again, if you see the laptop, okay, if you see the laptop in your checkout cart, that's how you guys know that you're getting one. There are 4 laptops available for this evening. All right. So there you guys have it. Oh, nice. TK. TK goes, I made 10% account move today. Anybody else? I'm not a member yet. I should be by now. I probably could have made a 20% account value. Yes, TK. TK Turd, if you're already, you're benefiting and having success just based on the information that is provided and shared with you on these live streams. Imagine if you were a full-time member. The things I do on these live streams is it's 5% of the education and the guidance that you guys will receive as full-time members. Charles Wilkinson, I started with $350 and I can give my granddaughter the best Christmas and then some. Oh, wow. Charles, that's awesome, man. Just join and ask for help in chat if needed. Thanks, TTG. That's incredible, Charles Wilkinson. I'm happy for you, man. I'm so happy for you. I can give my granddaughter the best Christmas and then some. That's awesome. What a blessing. That's why we do this. You see a lot of other places and programs out there that they talk about, mansions and Lamborghinis and yachts and private jets and these lavish fancy vacations. And, they're just trying to take advantage of your desire to become more financially successful. And what it really is all about, though, it's about the things that matter. It's about, like what Charles Wilkinson said, it's about giving his granddaughter the best Christmas that she's ever had. It's about not worrying what the price of gas is, or being able to pay off your mortgage, or your kid not having to take out student loans, or you not having to tell your kid that they can't go to the college that they want to. It's like that. That's what this is about, right? That's where we focus, and that's where we help people achieve and reach their goals. I always ask people, like, what's your goal? Like, why do you want to be a trader? Like, what is it? What is it about, and people are like, oh, I want to be able to buy a sports car, and I want to be able. It's the wrong reasons, man. It's the wrong reasons. You're trying to run before you walk. Before you try to buy a $500,000 car, why don't you try to start just making $100 a day first, and then start making $200, and then $300, and so on and so on and so on. Why don't you start there first? Because I'm sure there's a lot of people that are on this live stream that would love to make an extra $100 or $200 a day. You don't have to be making $3,000, $4,000 a day. Can you get to that point? Yes, of course you can. Can you get to a bigger point than that? Yes, of course you can. Can you get to a point where you have 5-figure days? Of course you can. Members in True Trading Group have done it. But it takes work. It takes time. It takes effort to get to that point. Don't just skip over all of those steps. It's like climbing a ladder. When you climb a ladder, do you just jump to the very top of the ladder, or do you go up one step at a time? Trading's a lot like that. You've got to go one step at a time. When you try to jump all the way to the top of the ladder, chances are you're going to miss and you're going to fall off the ladder and you're going to break your back. Okay. Which would be the equivalent of you trying to make 5 figures in one day when you haven't even been able to be profitable yet. And then you blow up your entire account in one day. Don't do it. Learn the proper way. This is not gambling. Okay. Trading is not gambling. TTGoffer.com, TTG121 coupon code. All right. The next 4 people, you guys get a free laptop. All right. Okay. Alexandru, we got to welcome Alexandru. Guys, hurry up. There's 3 laptops left. I'm sorry we couldn't get more. I knew people were going to want more today. I'm sorry we couldn't get more. But we only have 3 of them available. Alexandru, welcome to the family. Guys, everybody welcome your new member. That means we are down to just 3 of those laptops now. All right. So you just have to go to ttgoffer.com. If you see the laptop inside the checkout cart, that's how you know you're getting one. And you just type in the coupon code TTG121, click apply code. The price drops to $11.47. Don't forget, you get the double your money back guarantee as well. So as long as you go through our courses, you pass our quizzes, you attend the study group, if you can't make back that membership fee, I'm going to give you back double your money, $2,294. That's the deal. That's what I'm willing to do. I stand behind what we've created. I stand behind this platform and this community. We're 5-star rated on Trustpilot with over 1,780 reviews. We 78% of our members renew their membership. Based on these statistics, I can very confidently tell you that True Trading Group has worked for thousands of people. You put forth a little effort. I think there's a chance it can work for you as well. And I'm willing to back that up with a double your money back guarantee. Choice is yours. I can't make the decision for you. I'll give you the guidance. I'll share with you the education that I received, and I worked at a fund in New York. I'll share with you my experiences. The 9 other professional traders will share with you theirs, and the 10,000 members of your trading group will share with you theirs. You got to make the decision, though, to do it for yourself. No one's going to do it for you. How do I know I'm getting it if you only have, well, now, Tammy, now we only have 3 left. So Tammy says, how do I know I'm getting it if you only have 4 left? We only have 3 left now. Tammy, I'm talking to you specific because I know you really want one of these laptops. Tammy, open up a web browser right now. If you go to ttgoffer.com, hit enter. If you see a laptop in the checkout cart, that's how you know you're getting one. As people check out and they claim one of those laptops, our back end of our website, once they are sold out, it'll automatically remove the laptop from the checkout cart. That's how you know that you're getting one. So as long as you see it, that's how you know you're getting one. If you don't see it, then that means we have sold out. There's 3 left. Joseph, welcome. Joseph, welcome to the family. Tammy, hurry up. Hurry up. Joseph, welcome to the family, guys. There's only 2 laptops now remaining. Everybody, welcome Joseph. Okay, guys, let's get back to the overall markets now. We got, a bunch of our new members. Welcome all you guys. Are these laptops powerful enough to use for trading? A lot of our members do use them for trading. Members, you guys, if you guys use the laptop to trade, you guys can just comment in chat. All right, let's get into, let's get back into the education here, and let's get into kind of what happened today, guys. This is a significant pullback day in the markets, and it was a really a disappointment for the bear market rally that we've been experiencing. A lot of people were expecting the Fed to be less hawkish, and the statement was less hawkish, but Jerome Powell sure as hell wasn't. And I thought Jerome Powell was going to be less hawkish today than he actually was. And I felt pretty good about it once we got the statement release at 2:00, because the statement release was less hawkish. And that's why the markets rallied 7-8 points when that came out. But Jerome Powell put the kibosh on that real quick. And let's go back over to the intraday. We kind of talked about this at the very beginning of the live stream. All right, about what happened today. And I think it was very much by design. Okay. Very much by design. I think that the Federal Reserve is going to be slowing down the pace of their rate hikes, but he didn't want to come out and say it. Because if he came out and said it, he knows exactly what would have happened. And that's exactly what happened when the announcement was made at 2:00. Bonds rallied, yields got crushed, and stocks rallied. That's the opposite of what the Fed wants to see. The Fed doesn't want to see bonds rally. They don't want to see yields go down. They don't want to see financial conditions loosen. They want financial conditions to stay tight. They don't want to see mortgage rates go back down. Right? They want to see all of these things stay restrictive so it slows down consumer spending. So I believe that in December, you're not going to get another 75 basis point rate hike. You probably get 50. But I don't think Jerome Powell could have admitted it today. Because if he admitted it today, you would have had an entire month of financial conditions loosening going into the holidays, where consumer spending is typically higher anyway, and that could have been counterproductive to what they're trying to get to happen with inflation. And I think what ended up happening today was the Fed had to come out and they wanted to tell the markets, we understand that we've raised rates at the fastest pace in history, from 0 to, now you had a 25 basis point rate hike, a 50, and then 4 75 hikes in a row. That's the fastest rate hikes in history. And they came out and said, we acknowledge, for the people that think that maybe we're going a little bit too fast, we acknowledge that there's a lag in the effects you see in the economy from the rate hikes that we make. We acknowledge that, and we will take that into consideration. And we're going to be data dependent based on, information that we see. But At the same time, Jerome Powell wasn't willing to say, yeah, we're done with 75. And I really think that that's what happened today. Jerome Powell, when he was asked about, if you guys missed the beginning of the live stream when I was talking about this more, he was asked very specific questions by reporters during the Q&A, and he had two different opportunities to let the markets believe that they were done with 75 basis point rate hikes. And he didn't take it. He didn't take the bait. And it was very much by design, and that was very much done intentionally. The speeches that Jerome Powell makes are very carefully thought out, and the Fed members spend a lot of time writing those speeches because they know every single market participant on the planet Earth. They know every single participant listens to the words that he says. And they know that financial conditions around the world tighten and loosen based on the expectations of what the Fed is going to do. So the Fed has a hard job of trying to remain transparent and trying to communicate what it's going to be doing with the market. So the market is never blindsided by anything, and the markets are never taken by surprise, or the markets are never shocked. But at the same time, you don't want the market to start loosening up financial conditions, which is what happened in August. And that's why Jerome Powell got super hawkish at the Jackson Hole meeting, because financial conditions loosened a lot. During July and August, because people mistakenly took what Jerome Powell said at his press conference as very, very, very dovish, and it was bullish for stocks. And immediately you saw mortgage rates come down, you saw interest rates come down, and financial conditions actually loosened. We got to welcome Gabriel. Gabriel is the newest member of the group, guys, which means we're now down to just one laptop. Tammy, there is a laptop with your name on it. You have one left. Tammy, get over to ttgoffer.com, enter TTG121 coupon code, and then just enter info checkout, and you will be good to go. You'll get a welcome email after you join with instructions on how to claim the free laptop. All right. That is how you guys can claim your laptop. You don't have to enter your address. All right. So Gabriel, welcome. All right. So that's what happened in July and August. The Fed does not want to repeat that process. And what has just recently started happening in the market, right? You had this bear market rally, the month of October, the strongest month that the Dow Jones has had since 1976. Yes. I'll go to the Dow. This is the S&P. There's the Dow. Okay. This move right here, that is the biggest 1 month move in the Dow since 1976. I don't think the Federal Reserve wants to see the market rally, because if the market starts to rally again, people, their net worths go back up, their 401k balances go back up. They feel like they have more money. And if they feel like they have more money,
finish it.
If they feel like they have more money, they're more likely to spend more, and that will not help inflation.
Thank you. We got to welcome Jack. Jack Chen just signed up.
Jack, welcome. That is the last laptop.
Yes, but here's the thing. Tammy is literally on with Luciano right now. She had to call her bank to get approval for the.
I'll buy her a laptop.
I was just gonna say that I would do it if you didn't, because you bought it yesterday.
Yeah, I bought it yesterday. So you buy it.
Yeah, I'll get it. Yeah, that's what I was gonna say. She's literally trying to sign up, but she's, I think that she's Canadian, so something to do with like Canada making sure it's a legit purchase. Who knows? But she's working on it with Luciano right now.
Now I feel bad. I was probably giving her so much anxiety. I'm like, Tammy,
I was
probably texting. She's on the phone. She's like, Luciano, help me. I feel bad now. Tammy, I'm sorry.
I was trying to message you like, yo, chill. She's trying to sign up.
I'm sorry, Tammy. Tammy, don't worry.
Yeah. She's approved. They just want to make sure that it's not like a fraudulent charge or anything.
Yeah, no, of course. Yeah. Well, we will. So the deal is, guys, we have relationships with wholesalers, and when we can, I wish we could just offer them all the time. Trust me, if we could, we would. It's a better sales tool to be like, hey, join TTG, you get a free laptop. But we don't have them all the time because sometimes we can't get them from the wholesalers. And when we do get them, we buy them in bulk and we get really good pricing on them. So it makes sense for us to give you guys one when you guys join and give you some that added value when you join our community and we join our family. But Adam and I will Tammy will just buy one for you if you do decide. Well, once you do sign up here, I know you're trying to do it, and I have no problem doing that, Adam. So we're on the same page there.
All right, hang on.
So let me know. Let me know when we can officially welcome her to the family. That'll be exciting.
Yes. Hang on 1 second. I'll put myself on mute. Go ahead.
What?
I'll put myself on mute. Keep going. I'll let you know.
Oh, okay. Okay. So yeah. So back to the charts here, guys. So that's what you got. That's a big ride that you got in the month of October, right? I'm disappointed in Jerome Powell today. I thought he was going to switch his tone up, and if his tone matched the actual release, things I think would have been much, much different today. But he squashed it. You know, he squashed the statement, and instead he said that there's more risk to us not tightening enough than there is to us tightening too much. That is code for I'd rather have a recession than inflation continues to go higher. That's what that means. So the markets didn't like when he said that. That's not dovish, that's hawkish. And he said,
what about me? I want one.
Oh, no.
I didn't realize I was behind on the live.
5 more. You want us to do 5 more?
No.
Well, what are we supposed to? How do we do that? Why is Andre?
No, he's fine. I don't know.
I don't know what to do now.
Come on, guys. I was late on the stream because of work. Do 5 and 5. Do another 5. I'll do another 5. We'll do 10. That'll get us till midnight, and then that's it.
Damn.
Until we get more wholesale. Until we get more wholesale, I don't want to. You know, it gets expensive pretty quickly.
Yeah, I mean, all right.
Just so you guys understand, when we run out of these, Mike and I literally go on Amazon and Best Buy ourselves and like buy you the computer. So, anyways, all right, you'll do 5, I'll do 5, we'll do 10 more. Tammy just signed up, so.
Oh, good, Tammy. Welcome to the family. Everybody, welcome Tammy. Tammy's the newest member. Welcome, Tammy. Everybody, welcome, Tammy.
The answer to your question is yes, Mike.
All right. So, all right, Adam.
So
I mean, I thought
we'll not count Tammy. So 10 with Tammy.
Okay, so there's 10. Damn, I was gonna say let's buy 5 more, but you want to buy 10 more. So,
well, I said you'll do 5 and I'll do 5, and that's fine.
But I thought we were gonna do 5 together.
Oh well, you can't buy 2.5 laptops. So,
well, really, I was gonna make you buy 3, and I was gonna buy 2.
Okay, I mean, one of us is an award-winning hedge fund trader.
One of us is an entrepreneur mastermind.
Who's that, bro? I don't feel it.
So, all right. So here's the deal, guys. So then I can't believe this. We're buying 10 laptops for the next 10 people that join before midnight.
You can't believe this. We do this all the time.
But 10 is a lot to buy.
We're giant. We are giant pushovers is what we are.
10 is a lot. I was going to say 5 and you just threw out 10. So anyway, so guys, all right. So, and honestly, it doesn't matter if you go to TTGoffer.com, as long as you see a laptop. Andre you still see if you see the laptop up there, then that means that you're going to get one. We'll commit to then the next just 10 people, and then we'll just buy the laptop at the retail price for you for joining the family. We'll get either a Dell, an Asus, an Acer, HP brand laptop for the next 10 people that join. Like I said, you can use the trade with, use it for work, give it to your kid for school, or give it to somebody for a holiday gift, whatever. Sell it on eBay for a few $100, whatever it is.
Do you think it's possible to go to China safely right now? Because I may go there and see if I could get see if I could come back with like a crate, like Alibaba or something,
Why would it not be safe to go to China?
Right now? I don't know. The hot climate right now, man.
Just don't get COVID. That's all.
Again?
Yeah, they won't let you leave if you get COVID.
Oh, well,
they locked people inside of the Disney amusement park until they got a negative test.
Yeah, I mean, it's a small world after all,
All right, we're getting off topic, guys. I'm sorry. We got to get back to the stuff that makes us money. So welcome to all of our new members. Let's get into what we have here. Okay, so that's really what I believe happened here today. I do think the Fed is going to slow down the pace of the rate. They're not going to pause. They're going to keep raising rates. They're not done yet. They're going to take rates to between 4.5 and 5. That's where the Fed funds rate is going. So they're not done raising rates yet, but they're closer to the end than they are the beginning. And I do believe you're going to see a slowdown in that pace, and you'll see that slowdown in December's rate hike decision. I don't think they give you another 75. I just don't think the Fed can tell you that. So what you now start to look for in this market is your CPI number that comes out on the 10th. The CPI number now is the next catalyst that will determine whether or not the October 13th low of 348 is in jeopardy. If the CPI number on November 10th is lighter than expected, then I would tell you that the Santa Claus rally thesis is still game on. And guys, that's next week. Okay. So you had 2 catalysts left for the Santa Claus rally thesis. Santa Claus rally means that between like Thanksgiving and New Year's, the markets move higher. It's historically one of the seasonally the strongest time of the year, where historically, if you go back to, when the S&P was initially founded and you look at every single month of every single year, that time period, historically, the markets go higher. And it's one of the best performing times of the year. So in order for that to still be the case, one of the catalysts that you would have looked for would have been a less hawkish Jerome Powell today. You didn't get that. I thought he was going to be less hawkish today. The statement was he was not. Next catalyst is going to be your inflation. Now, inflation has been very stubbornly high for the last several months. Still above 8%. If the CPI number for the month of October, which is what you're going to get on November 10th, okay, so November 10th is going to be CPI's inflation number for October. If that number is higher than September's number, then those 348 lows are no longer safe, and the Santa Claus rally thesis would most likely come off the table, and you'd be looking for probably a new low of the year before the year is over. Because one of the other things that Jerome Powell said was, in order for us to slow down our rate hiking, is we need to see inflation coming down month over month. And you really haven't had a significant move to the downside on inflation yet. It's been slowly moving down, but you need to see a considerable drop. Now, if you do by chance get a considerable drop in inflation in the month of October, if you do get a considerable drop thanks to shelter and real estate or healthcare costs or whatever it is, these are the areas of inflation that have been very, very sticky. The areas of inflation that have remained high have been shelter, rents, healthcare costs, and wages. Those are the areas of inflation that have been the worst. Food also has been very bad. Energy prices have come down a lot. That's been good. They've risen slightly in October, but they're still down considerably from their highs. Used car sales, those prices have all come down considerably. So there are areas of inflation where things are slowing, but there's other areas where things have not. And you need to see some relief. Really, if you were to get relief in food, the CPI number would be drastically different. And if you were to get relief in shelter, the CPI number would be drastically different. You get relief in shelter, and you're going to be looking at a six handle on CPI before you guys know it. But shelter is one of the last pieces of inflation to come down when the Fed raises rates. It's just a matter of how economics work. Real estate prices lag, just like the unemployment numbers lag the strength of the economy. Like as the economy slows, the unemployment rate is the last thing to go higher to show that the economy is weakened. Same thing when it comes to inflation. The shelter and real estate is the last component to actually start to come down. And once that comes down, then all of CPI really just comes down with it. So we have to wait and see what happens on November 10th. I don't know what the number is going to be. I'm not coming on here to try to tell you that this is what I think the number is going to be on November 10th. I have no idea what that number is going to be. Nobody has any idea what those numbers are going to be. Not one analyst consensus has been correct so far on CPI. So when all of your analysts that work on Wall Street, that do this for a living, they all come up with, this is what we think the CPI number is going to be, and then you average them out, and then there's your number that is expected. You haven't had one time the number was actually what the expectation was. It's been above it, it's been below it, and then it's been back above it. So we got to see what that number is. If it's higher than expected, forget about it. Just stay in puts, guys, and you're going to be looking for the market to work themselves back down towards underneath, get back underneath 3,600. If it's under the expectation, then you're going to look for a bit of an inverse head and shoulders pattern to really form on the SPY on the back of this bottoming process, where the markets will probably stay maybe a little bit weak. Like these are not daily I'm just drawing you some candles, kind of like maybe some price action that you might get, where you get like something that looks like this and you put in a higher low, and you see how you'll put in like a higher low off of your October low, which is the low of the year. And you can get something that looks like this. And all of a sudden you get a CPI number that's better than expected. And the market does that. And then you'll be right back on to a Santa Claus rally. And then you probably get like some pause and some hesitation. And all of a sudden the markets look like this as inflation really cools off going into the end of the year. And then you do have the Santa Claus rally that still looks very much intact. This is what the price action would look like, in my opinion, if you were to get a CPI number that is lighter than expected. If the CPI number is heavier than expected, then you're going to be most likely, in my opinion, you'd be looking at something that looks like this, right? You get this little hesitation here, and then you crack, and then you'll be looking about going back down and flirting with those lows. Okay, and that would then make a Santa Claus rally very, very challenging and very difficult if that were the case. So that's going to be the next catalyst that is really going to look to move this market. I'm going to stay probably bearish for the next couple of days. There's some key support levels that I'm looking at. One of them being like 373, 374, we're right above that area. And then underneath that, I'm looking at 364. Those are the two support levels that I have on the SPY. I'm looking for us to go. I just don't know what the catalyst would be to just take back the move that you saw today. I just don't know what it would be. So I'm going to stay looking to like short bounces and short rallies until the CPI number. And then I'll start buying dips again if the CPI number is under the expectation. And that's it. And that's going to be my game plan here. That's what I'm looking for. For the next week. But guys, this catalyst, you're running out of catalyst to determine what's going to happen here before the answer is just going to be out there. And then that catalyst is going to be on the 10th now, where you're going to get your CPI data. So you guys want to make sure, like I said, we're going to have some of those laptops. We'll have 10 laptops available here before the night is over. So if you guys want, do you think the elections could be a catalyst? The elections could help. Okay. The elections would help if CPI is under expectation. If CPI is above expectations, that's going to be more of a negative catalyst than the elections would be a positive catalyst. The elections, usually midterm elections, historically are positive catalysts for the market. And the market's actually like gridlock. So if Republicans take the House or they take the Senate or they take both, it's going to be seen as a positive in the market because the market likes gridlock. The reason why markets like gridlock is because there's really never a chance. There's really no chance of like an excessive policy either to the right or to the left being passed when you have gridlock. So the market actually takes gridlock. It has nothing to do with, the markets like Republicans, the markets like Democrats. The markets don't give a damn. It's gridlock. The markets will like that. And that could be a positive catalyst. That could be a positive catalyst for the market. So, but that's not enough of a positive catalyst if your CPI number for October is 8.4. Now, if the CPI number for October is 7.6, then the midterm elections could just be another fuel to push the markets higher after the CPI number comes in light. If the CPI number comes in light, you have to realize the likelihood of a lighter rate hike in December will just exponentially move higher. You'll be looking at a 95% likelihood probably of a 50 basis point hike at the December meeting if your CPI number is lighter than expected on November 10th. And that'll be a positive for the market. What are my thoughts on jobs data tomorrow? I think they're going to be stronger than expected because every single jobs number that's come out this week has been stronger than expected. So why would I think anything otherwise? The expectations have been under. The ADP employment report today, that was how many new jobs were added in the private sector. 239,000 new jobs. The expectation was 193,000. Most of that was in leisure and hospitality, but nonetheless, they're jobs. The JOLTS number from the other day, that's job openings. Job openings were 10.7 million versus 10.3 million the month prior. So 400,000 new job openings. That is not a sign of a labor market that's softening. Now, tomorrow's number is going to be jobless claims. These are people that have filed for unemployment either for the first time or continuously. So there's initial jobless claims, which is you're filing for unemployment for the first time, or continuing jobless claims, which means you are continuing to file for unemployment benefits, meaning you have not yet found another job. So that's the data that you're getting tomorrow. I would just have to assume if all the other jobs datas have been stronger than expected, I would expect that number to be stronger than expected.
Quick question for you. Why do you keep saying, and I'm asking because I don't know, why do you keep saying, yes, it's in the labor and hospitality, or what did you call it? The something hospitality? Leisure and hospitality. Why do you keep saying it like that? Like that's
because people that are, there's arguments out there that the labor market is actually not as strong as the numbers suggest, because you still have such a lag because the leisure and hospitality industry was the most hurt and lost the most amount of jobs because of COVID.
Right.
They lost more jobs than any other area of the economy.
Yeah, of course.
So, right. So to see, we have all these new jobs, people are like, yeah, but it's misleading because it's just people that are getting hired back in the leisure and hospitality business.
Is that true?
While other areas of the economy, people are losing their jobs. So they're like, that's not a fair it's not a fair representation because you have such strength in one area and such weakness in others. And that's why
strength only in leisure and hospitality?
No, it's not only, but that's where the bulk of the new jobs.
Does leisure and hospitality count as restaurants as well?
Yes.
Okay. I see a tremendous amount of restaurants hiring.
Right. So, and also when you look at holiday season, like all your part-time holiday jobs, you look at that too. So like jobs numbers get kind of skewed once you get towards the end of the year because a lot of people take on a second job, or you have these companies, they hire people, but they hire them for 2 months and they're let go in January.
Right.
So That's why.
Crazy time, man.
Yeah.
Crazy time.
The areas,
Talking about tech jobs. My uncle works for a large IT company in what do you call it, in Orlando. They do a lot of the infrastructure work for the theme parks and things like that. And I mean, I can't even get the guy on the phone. I mean, that's how swamped he is right now. They're not a large IT company, but they're, smaller, mid-level IT company, packed with business right now. They've had to turn down business because they can't hire people quick enough. They do like security and and setting up like internal servers at these companies. I mean, it's crazy.
Yeah.
Because it just depends on the type of business that you're in,
Yeah.
We have a member in chat, this guy Rhino. He and I talk about it sometimes, because he sees a lot of that stuff firsthand as well. He gets government contracts as well, or does work for the government as well. And yeah, he's had a hard time hiring people too. I mean, how misleading is it?
Do
you think anyone actually has that answer?
No, not really, because listen, there's areas where people are losing their jobs. Like right now, people that are losing their jobs are in the mortgage industry and in the tech industry. Those are the people that are losing their jobs right now. It's the tech companies that overhired. It's tech companies that overhired because of COVID.
Yeah.
And mortgage companies and whether you're mortgage banking or like a friend of mine owns a mortgage banking company, and he's literally, I saw him at an Italian festival just the other day. And he said he's probably going to have to lay off a lot of people, but he's in the mortgage banking bit. People aren't applying for mortgages. Interest rates are 7%, it depends on where you are. Meanwhile, you drive down the road and you look at a restaurant or a cafe, or you look at Starbucks, or you look and it says help wanted, help wanted, help wanted, help wanted. Amazon said they're freezing hiring in one area of their business, but they plan on hiring like another 150,000 people next year in other areas of their business. It really just depends on the different areas of the economy. And I got to tell you, there's this theory out there, and I got to tell you guys,
a rolling recession, right?
Yes. The more this plays out, the more that this starts to look likely of what's called a rolling recession. A rolling recession is very unique because it hits different areas of the economy at different times. Like right now, you can say the real estate market is in a recession already.
100%.
When you take a look at mortgage applications now from where they were a year, mortgage applications are at the lowest number they've been in 20 years, right? Like when you take a look at that, you can say, well, yeah, the mortgage business is in a recession. You can say that, but then you take a look at some of these other areas, and it's like, you're an event marketer, you put on like live music events, you can't even, the second you release tickets, they're sold out.
Right.
Go tell a hotel, go tell the CEO of Hilton and Marriott that just reported earnings that said that they're like demand is back to, before it was, even before we even had COVID, and it's even higher. It depends. Like when you think about COVID, because COVID's the reason why all of this has happened and closing the economy. When you think about the economy, what happened during COVID, certain areas of the economy got absolutely crushed. Other areas absolutely boomed.
Yeah, if you were able to be flexible during the beginning of COVID, if you had the ability, which some people did and some people didn't, to be flexible with your work at that time, there was a tremendous amount of opportunity that took place during the beginning and throughout COVID.
Yeah, it's
more
sense.
so than just getting free money. There was tremendous opportunity.
Yeah,
I'll give you an example. My aunt, who's Josh's mom, right? Single mom. Her husband died. So whatever. So she's taking care of the kids the whole time, and she's in the clothing manufacturing business. So all of the stuff that she gets, all of the clothes and all the fabric and all that, comes from places like China and other places. So everything got shut down during COVID, and she couldn't get anything. And what she was able to do, because she saw a need for it and she was quick with it, man, she pivoted. She pivoted and she went to these factories that had like excess fabric and things like that in downtown LA. She got a ton of like throwaway fabric and made thousands and thousands of fabric face masks, and had some of the best months that she's ever had in her whole life. I think she made over $500,000 cash, you know, for those face masks. You know, I mean, it was, you know, but that's the point I'm trying to make. Out of all of this here, if you can pivot and you have that flexibility to move quickly, you're gonna make there's opportunity everywhere. There's opportunity everywhere, man. You know,
I look at, you know, that rolling recession starts to make a lot of sense, because the economy did not boom all together at the same time.
No, it's not gonna look. You can't. You know, you think about the way that everything was in 2008. You didn't have the gig economy. You didn't have. I mean, I think eBay was just getting started right around that time. You know, or maybe even it was before that. Or, I'm sorry, maybe it was after that. You know what I mean? I gotta check, but it was right around. It was you didn't have the online economy that you have now. It didn't exist.
There weren't as many ways for people to get a second income.
Dude, it was your factory closed, your hedge fund closed, your this closed, you lost demand over here, and you had to go home, and you had to file for unemployment, and you had to figure out different ways to make money. And you know, there wasn't the ability like you have today to literally sit at home, and if you have the right messaging online and a website and a blog, you throw ads on there, you can make a couple $1,000 a month extra. You know, you didn't, you know, and I'm oversimplifying that, but you didn't have that before. You didn't have that in 2008. It's a lot harder for there to be a total rug pull on everybody right now that's why, you know, people think, oh, is this 2008? I don't know that you get there again unless you have like an insane sovereign debt crisis. You know, at which point, yeah, you're going back to 2008. Oh, you know? Yeah. But you know, that's like the most extreme example possible. You know what I mean? Yeah. So I think that as long as you avoid complete and total economic collapse, it's going to be very hard to see a 2008 again, because there's too many other things that are set up.
I just think that you're not going to see. I just don't think it's possible for unemployment to get to 9 or 10%, which is what happened in 2009. I just don't see that happening.
Never going to happen.
Because you're starting from a point of such tremendous strength that I can see unemployment going to maybe 5 or 6, 9 or 10. I just don't think it's possible.
Yeah, I mean, I don't think it even goes to 6.
No, I'm saying like worst case scenario. I would say, you know, even if things really hit the fan, if like the worst possible outcome actually happened, I think that you would only even get into the 5s, maybe 6. I just don't think 9 or 10 is even in the realm of possibility. But
I don't see how there's, like I said, man, I think that you'd have to have there's a lot of things that would have to completely collapse for that to happen. It's not, you know, like, you know, I get annoyed at you because I ask you, hey, is it possible? Is it possible? You're like, sure, it's possible, you know, but so like, yeah, is that possible? Sure. I guess it's possible. Right. Is it possible that I go home and my wife has 2 supermodels waiting for me? I mean, sure, I guess it's possible, but like, it is not the most likely scenario.
No,
You know, I think that what you see is, I think you see unemployment get into the high 4s, low 5s. And I think
even so, that's not going to happen until next year. That's not going to happen this year.
No, right, exactly. And by then, if you just sit there hoarding money, I mean, even if you don't sign up for True Trading Group, if you just sit there hoarding cash, doing absolutely nothing to pivot or make a move for yourself, and you wait till next year, and then this happens, and then you're like, oh, I'm screwed. That ain't nobody's fault but yourself at that point. Because there's a lot of ways here that people can earn extra income. And there's a lot of ways people can supplement their income. And honestly, the stock market in a bear market, I mean, dude, that's where you're going to make a tremendous amount of money. You're going to make more money in a bear market than you are in a bull market. You'll make more money in a bear market faster, I guess I should say, right?
Yeah, you can make it because
you'll make it faster in a bear market than you will in a bull market.
Yeah.
So, look, this isn't going to be like this all the time. I remember before COVID, markets could be boring as crap. You sit there, you get lulled to sleep. It's predictable. It's this, you got to wait for some stupid small cap to run up, and then that fizzles out, and then you got nothing to talk about. You got to does anyone not realize how insane it is, the amount of topics and catalysts that we talk about every day now?
It's nuts. It's absolutely nuts, the amount of catalysts that are in this market right now.
Like, what are people going to do? People are like, oh my God, it's like such a scary time, whatever. No, man, just wait. This is pretty amazing. Anyone that learns how to trade in this market is going to be a freaking rock star when things go back to normal.
Oh, yeah.
It's going to be easy street when things go back to normal.
Because because you don't have the sentiment shift. Like, so just look at my chart, right? You look at my chart, you see how there's so many shifts in sentiment.
Yes.
Where it's like everyone's bearish, right? And then you're bullish, and then you're bearish, 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 and then you're bullish, and you're bearish, and then you're bullish. Like, you see how the sentiment is constantly changing because there's so many catalysts, there's so many pieces of data, there's so many things happening that make people bearish, and then they make them bull. Like, in a regular bull market, you don't have that shift in sentiment from close. 1 week to the next. It's just like, oh, we're bullish for the next 3 months. And it's just, okay, just keep buying pullbacks. It's like, you don't have that kind of, and if you guys are able to learn in this environment, you're going to learn discipline. You're going to learn patience. You're going to learn risk management, which are the characteristics that any trader, regardless of your style, needs in order to be profitable. And this environment will help you build those characteristics and build those traits. And then when the volatility slows down, you're going to be able to hold pullbacks and short rallies with the best of them because you're going to be so used to the massive pullback and the massive rally.
The amount of future millionaires that are starting right now, that's going to be a very, you want to talk about an interesting statistic? I would love to know 2024, 2025, people that started trading in 2020, 2021. I would love to know how many of them came out of this ahead that really learned how to do it in 2020 and 2021. Or I'm sorry, 2021 and 2022.
Right. 2022.
Right. Sorry. Yeah. I would love to know how many of them were actually able to, because I think that the people that are able to succeed, at least improve as a trader this year are going to have such an amazing leg up, man, on everything. It's pretty wild. There are not a lot of millionaires in Venezuela. Unfortunately, not anymore. Chavez made sure that ain't got nothing to do with the stock market.
Venezuela actually used to be the
Venezuela was a beautiful, wealthy country.
They were one of the wealthiest countries in South America at one point.
Yeah, man, they were good. I had
I think it was
friends
like in the
that
80s or in the 80s or 90s. 80s.
Yep, a lot of my friends that were Venezuelan, their parents, parents or grandparents fled when Chavez came in. It was not a good look, dude. It's really awful.
Yeah, it's working out well down there.
What?
Sarcasm, Adam.
Oh. So Jack says I joined TTG when every dipped stopped working. Yeah, that's good.
You had some earnings that came out today too. They're not very good.
On Qualcomm?
Qualcomm, Roku.
I don't even know what Qualcomm does anymore.
What do you mean?
What do they do now?
They're a semiconductor.
Yeah, I do need a haircut. I'm getting one tomorrow.
Yeah, they missed on earnings per share. Inventory drawing down was a negative impact for them. It impacted their EPS by about 80 cents. So Qualcomm, let me see.
What about Roku? What happened with Roku?
Roku sales actually beat. They did 761 million in sales, but 702 million was the estimate. So they actually beat on sales. They grew their average user revenue by 10%. That's not bad. It's their guidance that was a disaster.
How do you get worse guidance on Roku? I mean, bro, who uses Roku?
I do not know a single person.
I don't know anyone that uses
I don't know anyone that uses Roku, but their guidance for Q4 sales is just 800 million. That's it.
Which is still ridiculous because I don't even know who uses them.
Yeah, me neither. But their expectation, Adam, the expectation was 895 million. And they said 800. So they're off by, that's a huge miss. That's more than a 10% miss on your guidance. I mean, that's bad. So, and that's why the stock is down 22%. I mean, Kathy Wood, man, I don't know.
If you have a smart TV,
I just don't know what this woman is doing. I really don't.
You love Kathy Wood.
I really don't.
You think she's like better than Warren Buffett?
Wow. Robinhood lost 1.8 million monthly active users.
Yeah, because they probably, a lot of them blew up their accounts, but a lot of them went elsewhere. I would love to know, what did TD gain? What did Weeble and Mumu gain from that?
Yeah, they suck.
That's not, and yeah, sure. Even if you call it 50%, 500,000 people blew up their accounts and left trading. I'm willing to bet you that half of those people went into went to another brokerage firm. Yeah, here's Keith. Robinhood lost me last quarter. I'm telling you, a lot of those people are still trading, but they went somewhere else. They suck.
They really do. I hate them so much.
You know what really did it for me? It wasn't the payment for order flow or any of that stuff. I mean, because that shit's been going on forever.
Oh yeah.
It's. I mean, look, I'll ride with it, whatever. Support the cause. But what did it for me was the lack of responsibility taken when that kid killed himself.
Oh man, yeah.
Because they made it so easy. And look, granted, that kid had issues before that, right? But they made it so easy for a kid with no account size to over leverage himself that much. I mean, that's Robinhood's a prime example. What they did with with gamifying trading, it's a great idea, but it's not really an arcade. You know what I mean? It's
Right.
not an arcade,
It's not a
and
video
it's not a
game.
casino.
Right.
So when you start,
They made it. It's like the FanDuel DraftKings platform. Like it's
yeah,
not.
but I would even go as far to say that FanDuel and DraftKings are even a little bit more responsible in that sense. You know, what Robinhood was doing with their, you know, with that was really difficult. I mean, it was too much, man. You know?
Yeah.
So I don't know.
So yeah. So that's it.
You know, I can't stand Jerome Powell. Like I don't even want to listen. I you have to listen to him because of who he is, but I can't stand him.
Yeah, he kind of, I tried talking to him. He's right over here before, but he just ignores me. I look at him. I'm like,
He's
yo,
hoping if he stands really, really still that you won't see him.
yeah, he doesn't. I tried talking to him before, but he just ignored. He won't even look up. He just looks at the ground. He won't even look at me.
You know what I wouldn't give to see somebody in his position speak like a human being to people and not give these like perfectly tiptoed around responses, but to actually give a real human response.
Like to just give you like the question that the guy asked today. The reporter asked him literally, was like, yo, are you giving us 75 basis points again in December or not? And Jerome Powell's like, well, what's more important is, how far we go. And
he was like, well, I'll take that and I'll give you 3 different categories of 3 different examples. We'll take that. We'll multiply it by 6. Then we'll talk about the horizon over here. Inflation is high. We have to get it down to 2%. And like that's, I mean, it was stupid. Somebody said in chat today when we were watching it, they were like, oh, it's the same stuff. And I was like, yeah, it's like when Mike reads the beginning of a script every night. It's the same exact thing.
Right. It's the same thing.
Just what I wouldn't give, man, to have somebody out there, in that position or in politics or whatever that just spoke to you like a human being. I mean, this guy comes out and I get what he's doing, whether or not, I agree or whatever, some of this stuff's way above my pay grade. But your decisions are directly impacting people's lives, their livelihood, their families. Bro, at least have enough respect to look at the camera, look them in the face and tell them, hey, I get it. I get it. And yeah, this is our goal to get here. I don't want you guys to go out and start spending a bunch of money. So I have to tell you this so that we can make it better. I mean, I don't know. And I know that he can't, it's not that simple. I get that there's a million different things for it, but I just feel like there's got to be a way for somebody in that position to just talk to the 320 million of us like we're people.
Yeah.
Anyway, CPI next week. That's cool. So, hey, look, I mean, correct me if I'm wrong, but I think the best advice to give anybody right now, or the best opinion to give anyone right now, would be to remain, remain flexible, remain reactive and proactive, and And you should, if you're able to do that and manage your position size, you have a real shot at making some real money in the next, in the next year.
Yeah.
Probably for as long as this goes on for.
It's out there for you guys. We're here. The community's here. Myself, the moderators are here. It's been one hell of a year, and we got 2 months to go. And then, when you really think about it, people talking about a recession, it's not even here yet.
I don't even think a lot of. I think it's here for some, man. If you're in the, like you said, if you're in the mortgage business or depending on the tech job that you have, you're feeling it. But if you're in leisure and hospitality, you're not. You have a job and you're getting paid well.
You're getting paid real well.
Yeah. If
a lot of places in that industry have,
dude, if you're independently in the gig economy, you're cleaning house right now. Anything online is cleaning up right this second. But that'll all roll, like we were talking about. So inflation is going through the roof across the world. Why are we thinking it won't in the US? It already has. The hell are you talking about? Where have you been?
What are you talking about? Inflation's 8%, 9%. What do you mean?
Yeah.
No one said that inflation's not going through.
That's the problem. Inflation's got to come down.
Yeah. So unless this person's saying that they think inflation.
I think they're confusing inflation for recession.
Or maybe they think inflation's going to go higher. Listen, there's people that think inflation's going to go higher.
Not a chance, bro. Shit's done.
But I just don't. Not with.
Bro, there's no way that inflation's going higher with as many rate hikes and everything. There's no way, dude. No.
Inflation going up means Powell needs to raise rates. That is what I mean. Yes, that they've been raising rates every single Fed meeting for the whole year, and they're going to keep raising rates.
Yo, take the TTG out of your username, please.
Yeah, nobody said that they're not.
I'm just kidding.
They're not. They're probably going to have to go close to 5% before they actually pause. If not, maybe 5% and then pause. But they're not going to pause until they get to like 4.5 to 5. Probably 5 is probably where that pause probably takes place. But they're not going to just keep raising rates, indefinitely. There will be a point where they're going to pause, and I think you're probably 2 more rate hikes away from a pause, where they'll wait for like 1 or 2 Fed meetings where they won't raise to see what happens with inflation, and what happens with the labor markets. But I think you're probably like 2 more rate hikes away from. You're going to get another hike in December, obviously, and then you'll get another hike probably at the beginning of next year, and then maybe they pause at that point. But we'll have to see. That's what I think ends up happening. But they're not done yet. They're definitely not done yet.
Nobody expected them to be done.
No, that's why I was confused on that person's question. Nobody expected them to be done.
Somebody said, I work in Africa. 20, 30, 35% all over the place. U.S. is not immune to this. Nobody said we were. But there's a big difference between the U.S. economy and the economy in certain places in Africa.
Yeah, you can't compare the U.S.
You can't compare it. You can't compare the two.
You cannot even come close to compare the two.
Yeah.
The GDP that's created by, California is greater than Africa itself.
Mike, what do you think people should do for tomorrow?
Tomorrow,
you got to go. I think you got to go back to the game plan of just stick to the game plan. Be reactive and proactive. Pay attention. Take what the market gives you. All that stuff.
Yeah, I think that I'm looking for the market to go a little bit lower tomorrow. Maybe get down to 373, 371 maybe, and just get a little bit more of a rollover from disappointment from Jerome Powell today. And then bounce and try to stabilize. I don't necessarily think the market is just going to completely roll over all the way back down to 348. I don't think that's going to happen.
What happens if the Ukraine war ends?
Oh man.
Before the end of the year.
You want to talk about a market rally? If there was a piece of news that came out that said Zelensky and Putin just met in person, shook hands, and signed a peace treaty, and Russia is withdrawing all of their troops and equipment out of Ukraine, the market would absolutely rip everybody's face off.
So I'm gonna go on a limb and make a prediction. It's nothing to do with the stock market. It's just my opinion, and I could be dead wrong. I think the war ends before the end of the year.
Okay, why do you think that?
I've talked about it with you before. I do. Just,
just like a gut feeling.
Yeah, let's just call it a gut feeling for now.
Yeah, that's dude. Listen, I hope so. Just for a straight, humanitarian. I hope so. There's a lot of people that are dying.
And for the record, I am not a self-proclaimed expert on international
affairs and
geopolitical anything. So, definitely take everything I say with a grain of salt. I'm definitely not the smartest guy in the room, but call it a gut feeling. I think that it ends before the end of the year.
I hope so. That would be incredible. The market would rally and a lot less people would die for, this would be great. And there's lasting effects of that, energy prices and food prices. There would be a huge help for food prices and for energy prices if that was to end. And that's a huge part of inflation, food prices and energy prices. Energy prices have been cooperating. They have been coming down. They went up slightly in October, but they've come down a lot in August, September. So they're still drastically lower than where they were, but food prices have remained elevated. And a lot of that does have to do with the Russia-Ukraine war.
See what happens. The first thing I'm buying if the war does end, and I'm right about that, fucking lottery ticket, bro. Are you kidding? That's the first thing I'm buying. Santa Putin in that hat. I know you meant stocks, Carlos. I was just messing around. Yeah, I mean, look, I think either way, this thing kind of works itself out over the next 12 months, dude. 12 to 14 months.
Yeah. 12 months from now, you're going to look back and you're going to be kicking yourself right in the ass that you didn't do anything.
Look, if the Russia-Ukraine war ends, that would be great. It would speed up the process of like a return to normal and you get a huge rally, right? But even if it doesn't end before the end of the year, in the next 12 to 14 months, there's going to be a huge return to normalcy, in my opinion.
Yeah, because inflation will come down. The labor market will soften. You'll have a mild recession. The Fed will stop raising rates. And then, probably in over a year, the Fed will start cutting rates then back down. They'll probably raise them up to like 5 and they'll bring them back down to probably 3 or 3.5. And then that'll be it. And then you'll be right back to normalcy. So by the time you get to 2024, you're back to a level of normalcy where things have stabilized and everything has worked itself through. Hopefully by then the Russia-Ukraine war is over and you don't have a new war somewhere else. And that's it. And then you go right back to regular life.
Somebody's saying, can real estate survive?
What does that mean? No, real estate
only if you join House Hack.
No, real estate's not going to survive because nobody nobody has a need to have a roof over their head anymore. So come on, of course it's going to survive. Real estate, it survived in 2008, didn't it? Yes, it's going to survive. Of course it's going to survive. Yes, it will survive. I think real estate needs to come down drastically over the next, probably over the next 6 to 9 months. You're going to see, real estate prices come down significantly. They've already started coming down. Just look anywhere. Go look on Zillow. Price drop, price drop, price drop, price drop, price drop, price drop. You didn't see that at all last year. Now it's every 14 days, listings are dropping the price of their house lower, and that's going to continue into next year. But I don't think you're going to see a 2008 scenario where housing prices are going to absolutely collapse 50%, like they did in Vegas back in 2008, where home values went from 400 to 200. I don't think you're going to see that, because you still have, there was such a demand created for real estate and for shelter because of COVID, and that demand is going to keep, and that lack of supply that's out there is going to keep prices elevated. There is still a lack of supply, even though you're talking about a complete destruction in demand. You still have a lack of supply because of all of the institutions that have bought, which is the reason why rent prices are so high. Institutions have swallowed up, and companies like Airbnb and other institutions and hedge funds have swallowed up a lot of real estate, and then they just rent those units and they rent those places out. Even single family homes, they rent them out. Multifamily homes, they buy them up, they rent them out. They have these massive portfolios, and companies like Airbnb, a lot of people bought properties just to Airbnb them without any intention of actually living in it, and they rent it out. That sucked up a lot of real estate supply for people that wanted to buy that house to actually live in it. Now they can't. It's not on the market because an Airbnb person owns it and they rent it out.
Yeah, look at this. Mike and Adam's mansion alone will keep real estate up. Well, first of all, I don't have a mansion. I have a 1-bedroom apartment. So, times is tough. I got a 1-bedroom apartment, and Mike's got a mansion because he's a multimillionaire award-winning hedge fund trader. I'm just his assistant. I just come on here and
I hate you so much
and help. Sometimes he lets me wear his McLaren hat.
I hate you.
But I don't know what it's like to drive any of those cars. Yeah, man.
I hate you. I'm gonna go home now. I gotta take Jerome home. He's waiting for me.
You're gonna go
home. We got a lot of talk. He's got a lot of explaining to do. So
you're gonna go home.
We got a long car ride ahead of us. Me and Jerome and I. Excuse me,
guys. I'm gonna start a GoFundMe.
Markets are moving to the downside too right now as we're talking. A lot of stocks to the downside right now. A lot of your tech stocks are all to the downside right now. 21%.
Mike, do you think you could buy me some food tonight?
Yeah, man. I'll get you like a grilled cheese, maybe.
Nothing too fancy.
Grilled cheese.
It's fine.
And like the prepackaged yellow single cheese.
Maybe a water in a bottle and not out of the hose or toilet again.
I was just gonna give you my half drinking bottle of water.
Can you spit in it?
I did already. That's why I was giving it to you. Oh my God. All right, let's we're losing people here. All right, guys. So that's all she wrote. Markets are trading lower right now after hours. I think there's a little bit more downside here to go. So I'm going to stay bearish. I'm going to look to maybe short some bounces tomorrow and see if we get a little bit more downside before markets kind of stabilize, try to establish a higher low like I drew the candles for you guys just earlier. And then we'll see what happens with the CPI data. Who's on the live stream right now that is not a member and just had to deal with the banter between Adam and I? Type the letters TTG if you guys are not members of True Trading Group. Just type the letters TTG if you're not a member of True Trading Group, guys. There's new lows. Fine. Title TTG. I want to see who's still with it here. Oh, you guys are loyal. We got Paul Batiste, Johnny J, Jerry Howell. We got Gaber, Brandon, Carlos Lopez, Youssef, Andy, Lyndon, Uriah, Stephen Reinhart, Roger. Oh, nice. Brandon Skaggs is here from Matt's live stream. Matt, good friend of True Trading Group. Jonathan Wilson. Yeah, Roger goes, can I get a shout out? Roger, I'm shouting you out, man. I'm shouting you out. We got Benz. We got C. Great. Awesome. Fantastic. Guys, listen. Very cool. Listen, what I'll do real quick, I'm done with the educational part of our live stream. So, if you guys are not interested in a membership to our platform at all, then you can sign off the live stream. But first, make sure you subscribe to the channel. Turn on your notifications. We do these 6 days a week. So you guys want to make sure you subscribe to our channel. And we do have a 7-day trial. If you guys want to join our 7-day trial before you do go, you can go to ttgthree.com. If you want to join our 7-day trial, it's only $3. We charge $2 just to make sure that you are a real person. There's no automatic upgrade. There's no automatic renewal. If you do nothing, your trial just expires. You never charge anything again. So you can go to ttg3spelledout.com. That's our 7-day trial. Otherwise, if you're interested in the annual membership, let me actually show you the platform because we've got a great deal for you guys for this evening for those that want to join. The next 10 people to go to ttgoffer.com and use the coupon code TTG121 will get themselves a brand new free laptop and a 48% discount on the membership. Our membership is a year all-inclusive, access to all of our courses, all of our tools. There are no upsells. It's normally $2,212 for the year, but with the coupon code this evening of TTG121, you get a 48% discount. It brings it down to $1,147. Okay, you're going to get access to our chat room where the mods and I share our screen. We're live on the mic. We're giving you all of our trades. We tell you what we're going to do before we do it. And you will also be able to use the mobile app. The mobile app will let you see the screen share, listen to the audio commentary, and get the real-time push notifications when the moderators enter and exit trades. That's how 10,000 of our TTG members, many of which have a full-time job, are able to follow along and benefit from what it is that we are doing throughout the trading day. We've got an 80% win rate collectively amongst myself and the 9 other professional trading moderators that send out trade alerts, and you're going to be able to get access to all of them, whether you're in chat or just on your phone. 2 small private study group sessions with one of our pro traders, a chance for you to ask questions and speed up your learning curve to get you started on the right foot. Benzinga Pro's live news feed will make sure you get news as soon as it crosses the wire. This would cost you over $1,000 a year if you went to Benzinga directly. You guys get this included with your membership when you join True Trading Group for $1147. You also get TradingView's premium charting software. This is about $600 a year. If you went to TradingView directly, it's included with your membership when you join True Trading Group. You get the Trade Ideas scanner. That's about that's another few $100 a year to make sure you're always focused on the best stocks during the day. This is also streamed live on our platform, included for the $1147 price when you join. You don't have to pay anything extra for it. You get a simulator from ET&A that lets you trade stocks and options with fake money so you can practice implementing what you are learning in the courses. Please use the simulator. Prove you can make money on the sim before you risk your hard-earned money. This will cost you just under $1,000 a year if you were to go to ET&A directly. It is included with your membership when you join True Trading Group. You get our own proprietary scanner that lets you create custom scans. You also get dark pool data, unusual options activity, and options flow. This is extremely expensive data if you were to pay for it on your own. It is included with your membership when you join our platform for just the $1147 for the entire year. You also get a trading journal that will track your trading and give you the statistics, break it down to the numbers so you can see exactly what you are doing wrong so you know where you need to make improvements. There's also a social sentiment scanner. Okay. There's also a social sentiment scanner that will scour through Reddit, StockTwits, and Twitter and show you which ticker symbols are being mentioned most so you can help stay ahead of the crowd. You get analyst ratings. Analyst ratings on any stock. You're going to see which stocks have a buy, sell, or hold rating from all of the analysts that cover that stock. You get insider buying, insider selling, short data. It's all included when you join the platform. You also get a watch list of the stocks that we are looking at, the moderators and I, and a game plan on how we plan on trading them. And then you have all the courses. The course is always simplified yet expanded upon version of what I learned working at the fund in New York. The other moderators have added to those courses as well. And there are no additional VIP courses that cost more money after you join. You pay $11.47, you get access to our entire curriculum. Beginner courses, advanced courses, options, swing trading, trader psychology, crypto futures, you name it. We've got it all available for the $11.47. Then there's a video library with over 400 hours of additional educational video content. These are the workshops and webinars that we conduct live with members covering different topics that we record so you can watch them later. And then when you're a member, you can actually attend them live when we do the ones going forward in the future. It's time you guys invest in something real, folks. Something that can actually help you reach your goals. Something that will give you the education, but also the tools and resources that can help you guys make better decisions and therefore increase the chances of your success. Now, I can't guarantee you're going to be successful just because you join True Trading Group. But what I will guarantee you is if you go through our courses, if you pass our quizzes, and you attend one study group, if you do not make back the $11.47 membership fee at least once, I'll give you back double your money, $2,294. That's the deal. That's how much I stand behind this platform, and that's how much I believe that this platform and community that we've created can help you guys reach your goals. I'm willing to back it up with a double your money back guarantee. Nobody else is going to be willing to do that. I'll do that because we've only had to refund 2.6% of our users since 2016. We have a 78% retention rate on our members, and we are 5-star rated on Trustpilot with over 1,780 reviews. So based on what members tell us, based on our refund rate, our retention rate, the reviews people leave us, I'm very confident to tell you that this has worked for thousands of people. And if you're willing to put forth a little bit of effort, I believe that there's a chance it could work for you as well. And I'm going to back it up with a double your money back guarantee to give you some peace of mind, even though I don't think you're going to need it. It's there. All right. That's it, folks. Thanks for joining me tonight. Go to ttgoffer.com, enter the code TTG121. You see a laptop, you're good to go. You don't have to enter your address. You're going to welcome email with instructions how to claim that free laptop. I'll see you guys all in chat tomorrow. Everybody enjoy your night, and I'll see you guys all in chat